Hello, what's up guys, Alice Trades here. Today I wanna break down through a trade where I have passed my alpha challenge and got this results in the last couple of days. I wanna teach you exactly how I trade, how to trade the concepts I am using, and stay tuned. Watch the video till the end, subscribe, leave a like and leave a comment down below. We will see you after the intro. Okay, welcome to my first video. I wanna introduce you to my prop firm approach, how I trade the prop firms, how you have to trade the prop firms the right way to make a sustainable income with prop firms. So the only thing and the first thing we wanna focus on is we only trade A+ setups, okay? We need a clear strategy, we need a clear narrative. So what is a A+ setup? For example, I only trade A+ setups with clear high and low of the week and day, red folder news on the day, avoiding Mondays, higher time frame order flow and FVGs or order blocks are crucial, and we can use additional SMT divergence to confirm our trade IDs, but I don't use it often. And the main focus for me is DXY. DXY is the king chart. Start with the DXY chart and focus on that. If the DXY chart is ready to move, then we can look for Euro or GBP. And we buy the stronger one and sell the weaker asset. For example, if Euro is weaker than GBP, we want to buy GBP USD if we are bullish. 25% profit, then we cut our stop loss to 20%. If we're up 50% profit, we cut our stop loss to 50% and take some partials. And if we're up 70% profit, we move our stop to break even because I don't want to see price come back to my entry. And so we are safe, and our job as trader is to protect our capital. 1 to 2 trades a week with a risk to reward ratio from 1.5 to 3R. It depends on the structure. If you don't have structure, I always target 2R, but if you have clear structure where the price can smash through, for example, low resistance liquidity, so we can use 3R if it's in that range. Want to risk 0.5% in drawdown and 0.5 to 0.7% in a losing streak, or if you have 2 losers, a bad month, and 1% risk if you are on break even or above, and you can always risk 1.5% when you have enough buffer. For example, if you have 3% profit on your phase 2 account and you need 2% left, and you can risk 1.5R for a 1.5 risk reward, like for example. So it can't reverse close before 2R. The right firms and account sizes are also crucial. FTMO and Fivers are the best ones to go. Alpha Capital Group has some issues right now. I didn't have a payout from them. I will keep you updated if they will pay me out, but I heard some bad things from them. So I would say FTMO and Fivers, you have to reach max allocation first with these firms before you go to other firms, okay? So don't buy another challenge for another prop firm if you don't have 100k funding in FTMO or Fivers. And if we buy an account, we make sure that we buy 2 accounts instead of 1, because you can use different risk and different trade IDs to split up the risk, so we can pass challenges much easier, faster and safer, because if you lose one account, you have another account left, and you can make payouts with the left account and make all that money back you lost with the second account you lost. So we can buy more small challenges. So if you start out trading, I would say you have to buy 2 times the 25k challenge. Then if you make 1 to 2 payouts from the previous account, you buy another 50k challenge. And then if you make 1 to 2 payouts from the 50k challenge, you buy 2 100k challenges. And then you can let time make the most things, because time is very important. If you make 4 to 5% every month, that's outperforming 70% of the traders in the world. So you can make a sustainable income. I will show you my last trades that passed my Alpha Capital Group challenge. And yeah, I completely killed the markets last weeks. show you exactly how I trade, how I build my narrative, why I entered here, why I thought the price was going up from here, was going down from there, and I will show you my entry model. If you want to see more videos types of this, you have to comment down below and subscribe. I will launch a free mentorship on YouTube because I have a 80% win rate the last couple months, and I'll move you to the breakdown. So the first trade I want to break down for you is on gold, the weekly chart. This trade was, I think, on 12th October this year, of course. So what I am looking for is a weekly, monthly or daily internal range liquidity to external range liquidity, so IRL to ERL. We have a weekly fair value gap that is our internal range liquidity, and I want to see price get tagged in that internal range liquidity pool and move to the external range liquidity pool. So now here on the 4-hour time frame, you can see the weekly fair value gap here, and price has a little bit of consolidation there. And then we had CPI on Wednesday, and I was sure that CPI will make the low of the week. And what did the 4-hour candle do? It make a market structure shift on the 4-hour time frame, because we want to use time frame alignment, creates an order block down here, putting my limit order on the order block with stop loss at the CPI low, and was targeting 2R. And you see take profit got smashed. You see a lot of low resistance liquidity to the upside, a weekly fair value gap, time frame alignment, we drop down to the 4-hour time frame. We look for market structure shift or changes head of delivery with an order block or FEG, and we want to add narrative to it. What is the narrative here? CPI has created the low of the week. It's a Wednesday and gold is insanely hyper bullish. So everything for me was too long after CPI, and I added a little bit of structure here, like the market structure shift, the order block, and I knew exactly that the price will smash through all these highs, because right now gold is on a new all-time high right now. I was recording this video on Friday right now, and yeah, I will show you another trade. So right now here we have a daily FEG. I want to look for daily internal range liquidity to external range liquidity, this line up here. So I was looking for to a candle that tapped the daily FEG, and all you need is a repeatable model with a strict plan, strict rules, and you will have success in trading, okay? So what I have here is an order block. Why is this candle an order block? You see this down close candle swept all these lows here, trend line liquidity here, and tapped into the daily FEG. So as soon as we close above this candle, we created a FEG in line with it and changed the state of delivery daily time frame. So here on the 1-hour time frame, what can you see? This line here is the daily order block, okay? We have offset accumulation. We swept all these stops here, all these orders here, and then we are creating a new order block, a change in state of delivery. Why is this a change of delivery again? So we had a daily order block, and now we're using time frame alignment to go down to the 1-hour, because it is a daily narrative. Down close candle swept all these lows, and we close aggressively over it. So it became a new order block. So why I had drawdown here? You see the midnight opening price. Look how gold is respecting it the last couple days. Gold has very high algorithmical price delivery, so I always protect the midnight open price and targeting 2R. You see how perfect it goes to the 2-hour level and keeps continuing pushing higher. So this is a trade model I will teach you in the next couple videos. Subscribe, leave a like, and comment down below. Follow me on Instagram, Alice Trades Forex. Up to the next video. Bye.